Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, December 26th at about 2 p.m. Eastern. Before we go on, please know that all of us at ToniTurner.com wish all of you a very healthy, happy, and prosperous new year. Well, Wall Street's main indexes are hovering near their all-time highs in very light volume post-Christmas trading today, as investors bet that more interest rate cuts and strong corporate earnings will propel markets to fresh peaks next year. The benchmark S&P 500 hit an intraday record high today, veering close to the 7,000 point mark, while the blue chip Dow Jones Industrial Average was about 0.3% from its December 12th peak. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, the SPY was trading at $689.68 after hitting an intraday all-time high just above $691 and a bit above its all-time highs from October and from Wednesday, which was yesterday, this past Wednesday, the day before Christmas, on Christmas Eve. So it is back above its moving averages again here, as you can see, with the 20-day moving average now coming in here at $683, the 50-day moving average coming in here at $677. And of course, we can see down here that the 200-day moving average is coming in at $625. Now, we can't see it on this chart, but we know that after the SPY dove to its April 7th low this past year, it hit 482 that day, or closed at that. Then it rebounded and gradually climbed higher, walking up. It's the red line here, the 20-day moving average. It pretty much walked up the 20-day moving average all the way up to these October highs I talked about, and that was at 690 on the SPY, that all-time closing high up there. From there, it fell down to the 50-day moving average. Then it rallied up here to 685. Then it fell through both moving averages down here to 652. And that was pretty close. I think that October price support helped here, that low. Anyway, then it rallied back up above its moving averages. It kind of went sideways, but up a little bit. Finally came down here just over a week ago and fell back down here to 671, but real fast, turned around and then rallied again to where we are now at 689 and change, 690. Now, going forward from here, the big question still remains, as we go into the new year, it's a week away, can the SPY break above these all-time highs here at 690, 691? We know that the run-up from April gained 43%, and a lot of that was on the back of tech stocks. So we'll have to see what happens there. So now we do have, of course, potential resistance remains up here, and it's at 690 to 691. If we look for support here, we go back down to these moving averages, to the 20-day at 683 and the 50-day at 677, and then we can go to past week's low down here at 671 and then down to 652. That low here that was hit toward the end of November, and on down. So next week we do have coming up the Chicago PMI, the Purchasing Managers Index, as you know. We have consumer confidence coming out. We've got the jobs numbers coming out. So there's a lot going on. We'll have to see what the SPY thinks of all that, and if it can actually break above here, or if it has to take another rest stop, pull in and take a breather for a little while. So when we get some volume back in the market, we will certainly find that out. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. This is the ETF that closely follows our NASDAQ 100 index, which includes the top 100 non-financial stocks in the NASDAQ stock market. And of course, that includes all the big momentum tech stocks, including Meta, Netflix, Apple, Tesla, that whole group, Alphabet. When I captured this chart today, the Qs were trading at $624, just below this October all-time high up here, which came in at 637. The Qs is trading just above its 20-day moving average, which is coming in here at 619. Its 50-day moving average, which is coming in at 615. And of course, we can see the 200-day moving average coming down here at $555 and change. Now, we know that like the SPY and practically everything else, you can't see it on this screen, but the Qs rolled over earlier in the year, and they dropped to their April 7th low at 402. Then they started rebounding immediately and walked up. You can see it coming into June here, walked up the 20-day moving average again until the first week in October. Till the first week in October, when it right here lost a little bit of enthusiasm here, did a quick dumpster dive here, and then jumped back up, then popped up to new highs up here, new all-time highs at 637, then fell to its November low at 581. We're going to call this one right down here. Then rallied back up to 628 up here, then dropped this week down here, this past week and change, down here to 600, then rallied back up to where we are now at 624. And so kind of like the SPY, but the Qs are always more dramatic, not trading quite up at their all-time highs, but close to it. And remember that run up from April lows to these October highs, that was 49% gain. That's a lot for less than a year. Going forward, we do know that we have resistance here from the December pivot right here, again at 625, then up to the highs up here at 637, okay? That's the resistance so far. Potential support, again, back to the 20-day moving average at 619, the 50-day moving average at 615, and this dip right here at 600. We've also got the November low back here at 581 and more on down. So we are experiencing a Santa Claus rally this week. But to really earn that name, please know the major indexes have to move higher all the way through January 2nd. So we've got a little ways to go on that. But we're positive, no complaints. Our final chart today is a daily chart of the Global X U.S. Infrastructure Development ETF, the PAVE. It has 98 holdings. Some of the top holdings are Howmet Aerospace, Quanta Services, Parker Hannifin, Norfolk Southern, that whole group. It's a varied holding. The holdings are very varied in this, and that's kind of one reason I like it. The PAVE is a 5-star fund, a 5-star ETF. Now, when I captured this chart today, the PAVE was trading right here at $49.15, above its major moving averages right here. 20 days coming in at 48 and change. The 20-day moving average, is coming in at 48.68. The 50-day moving average is coming in at 48.01, so it's 48. And the 200-day moving average is down here coming in at 44 and change. So the PAVE, I'm going to call it, has been moving up. It did make an April low that you can't see, as I always say, like everybody else. It made an April low at about 33. It too rebounded and pretty much walked up its 20-day moving average, as you can see here, a pretty steep move here from April. Then started softening up a bit, fell more, didn't stay at above the 20-day, started walking along it, which makes sense. That's how trends work. Walked along its 20-day moving average, started slowing down here a bit in September, gradually inching higher, dropping to, it kept going here, then dropped to 45 in November, right here, dropped to 45 down here, then jumped up above the moving averages again, popping up to nearly 50 right here in December, then slowed down again down to the 50-day moving average, and then rallied up to where we are now at 49. It has been absolutely moving in a very gentle uptrend since those April lows. And I just kind of like the fact that it's something to look at. I'm going to stay probably pretty neutral going into waiting to see what's going to happen starting the first of the year. So I thought this might be interesting to watch right here. Again, the PAVE. So in the coming week, if the PAVE can stay above its 50-day moving average, which is now coming in here at 48, I will buy a small position of the PAVE in my trading portfolio. I'm going to put my stop in here, down here at 47.75. Now, if and when the PAVE can come up and close above 50, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the PAVE in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. Just think, you can start the new year out with new knowledge, and that helps make money for sure. In my training program, How to Bottom Fish Like a Pro, you'll discover a simple yet profitable strategy that all traders and investors want to know: how to buy low and sell high. You knew that, right? I'll show you an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see certain signals that the uptrend is about to end, when to take your profits. Our new low price for this program is only $199, and by the way, some of my trainings here are listed at only $59. That's here, and that's here. When you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you have unlimited access to learn at your own pace. So from our ever-popular 7 Steps to Successful Trading, right up here, our flagship product, How to Swing Trade Successfully, another very popular product, How to Trade the Trend to Profits, How to Read Charts, 3 Winning Setups is great for short-term traders, and one of my favorites, How to Bottom Fish Like a Pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen, or simply click on the orange button below. Until next week, have a wonderful finish to the holiday season. Keep green on your screen. I'm Toni Turner, and this is The Market Now.